Welcome to SimplerOptions.com. My name is Don Kaufman. Here we are on September 3rd, 2015. And I guess to kick off kind of this evening's video, indecision is everywhere. When I say indecision is everywhere, like, well, what am I really talking about? So many people are frequently like looking through their portfolio and they're looking at individual stocks, right? And they're looking like, okay, what did, Costco do today? And what did Tesla do today? And what did Facebook do today? And what did Apple do today? And they start like kind of really digging into so many individual issues. And I say, what does it matter? I mean, what does it matter, Don? I mean, I want to know what my positions are doing. And the answer is, what does it matter? The SPX or the S&Ps, okay, and the broader market, they're driving the order flow. They're in the driver's seat right now. And tomorrow morning, we're going to have an employment situation, an hour before the open. And that's going to drive markets higher. It's going to drive markets lower, okay? You don't know. It's a coin flip. It's, and the market's displaying risk to you. But the point needs to be made in this particular case is that, when you really start to look at markets, and here we're going to look at stuff like, well, we could look at the entire S&P 500. This is a heat map, and the heat map, I'm neither here nor there, but I'll look at something like Index Watch, and the reality is, okay, markets are moving with the larger index products right now. Now, here's a prime example today, the S&P 100, the advanced decline line. Well, there's 65 advancers, 36 decliners. I don't see what you mean, Don. Yeah, because the market's finished, relatively unchanged. So if that's true in the S&P 100, the market's kind of, unchanged, slightly higher, which makes sense, the advanced decline line. Then we look over at something like the NASDAQ 100. If the markets are moving, okay, relative to what is going on, you see something like the NASDAQ, okay, where it's down like 24 points, but the advanced decline lines, actually, there's 62 advancers. You realize, oh, Apple and Facebook, they're some of the largest market caps here. They're driving a huge amount of the order flow. But what I'm trying to really kind of, summarize in this is that individual stocks do not matter a significant amount amongst these moves. Okay, again, individual stocks matter a lot less. And I'm going to make the first argument here with Apple. So if we take a look at Apple and we just zoom in on some of the most recent period in Apple, let's just go to the last month and look at a daily chart in the last month in Apple. And then take that and just go to studies, okay, and just go add study. In this case, all we're going to do is compare with, I know it might be a little off the side of the screen over there, and go to the SPX, okay? And to compare apples to apples, no pun intended over there, okay? Or if it's apple, it's a lemon. It's, let's look at the line chart, and you'll see how these stocks are, stocks, I should say, the Apple versus the SPX, and how they're moving in relative tandem. And it's not going to be perfect harmony over here, but no matter where I go, I can even go to emerging markets. They look like the same chart. I can go to Facebook over here. It looks like the same chart. I can go to Costco. I can go to Microsoft, okay? I can go, look at that, with Microsoft following the SPX. I can go to the IWM, okay? Well, that's an index, Don. That's not fair. Good. Let's go into something a little crazier. Target. Is Target really going to buck the trend? No, it looks the exact same way. I can go to Walmart. I know I'm sticking in retail, but let's go to Google. Okay. Oh, Google. It's doing the exact same thing as the S&Ps. Okay. Let's go to Twitter. Maybe Twitter bucked the trend a little bit. Twitter actually did buck the trend a little bit, but that thing got so beaten down, give it to it. But right now, we found one underlying in a dozen that I just went through that's actually bucked the larger trend of the S&Ps, okay? So the answer is simply this. In the midst of volatility, okay, and the reason I'm showing you this, in the midst of volatility, it doesn't matter per se what you think an individual stock is going to do. It matters what is going on in the broader markets themselves. Last but not least, over here, I look to the SPX, the volatility skew in the SPX. And what the volatility skew happens to be, and I'll freeze the screen here momentarily, the volatility skew. All right, looking at volatility from the 1-day expiration all the way out to like 57 days or even 99 days, It's completely flat, meaning here we have a 25 volatility, okay, and roughly all the way out here, 50 days, we have 25 volatility. It means we know absolutely nothing at this point other than volatility it's elevated across the board in the SPX. Okay, and that's something you just have to kind of read into and understand that that's the market's way of saying I'm totally indecisive. Most of the time, the volatility is either drastically lower in the here and now, or during periods of high volatility, we see the volatility drastically higher in the near duration. Right now, the volatility skew is totally flat. We have actually hit complete and total indecision. And the S&Ps are at 1950. It's this giant inflection point on the eve of a major announcement coming out over there. So think about it coming into the employment situation tomorrow. Last but definitely not least, I want to introduce you guys to a product that we have now. This product, it is completely and totally free. So if you guys, if you're involved in markets day to day, we're not asking you to spend a dime over here. Just check this out. simpleroptions.com/simpler report. So many people and so many of our clientele, they go to these different websites and they go like, oh, I got to go to this media source or this media source to figure out what's going on in markets. So for the last several years, I just get an email sent to me, and the email comes 4 times a day. And that email ultimately says, hey, here you go. This is what we're looking at pre-market. Then there's another email that says these are the upgrades and downgrades of the day. Then there's a third email that comes out. It's what we call kind of the midday update. That comes out and actually tells me what's going on during trading. And then there's actually an email at the close of the day. Listen to me. It's a lot of email. But these are very detailed reports that if you went out and tried to buy this yourself, all right, this is taking a bunch of major media sources and mixing it with what institutional traders are looking at, what levels are important. I really wanted to put this together because I've been looking at this particular letter. It's now, okay, we purchased it. It's called the Simpler Report. It's simpleroptions.com/simpler report. All you have to do is go to that, okay, go to that site, put in your email address. We're not soliciting anything in here. It's the Simpler Trading Report, first name, email address. It is going to email you 4 times a day, so get ready for it. But couldn't ask for anything better. That's free, and I don't mind telling you, paid quite a bit of money for it. And John was like, all right, just give it to everybody. And I love the idea. If you want to be in the know, and it's something that I've received for years, well before I was ever with Simpler Options. I received this, so it's simpleroptions.com /report. Check it out. Again, there's absolutely no cost, and we're not planning on having that. It's just it's for you 4 times a day. Again, lots of emails, but well worthwhile. Thanks a lot, everybody, for joining us here at simpleroptions.com. My name is Don Kaufman. I'll be back next week. Bye-bye.